Reserve Bank raised several financial stability risks. The government's high debt and its related higher debt servicing costs were flagged as a primary concern, more so as economic growth continues to lag, which means SARS is not able to collect as much tax revenue as previously anticipated. The bank noted that the higher global interest rate environment had worked against emerging markets like South Africa.
Looking back at 2023, the year has been characterized by higher interest rates in advanced economies, uncertainty about economic growth trajectories, and constrained fiscal positions. Yields on 10-year government bonds in advanced economies have increased significantly relative to emerging markets since the release of the Financial Stability Review in May 2023. This has contributed to a reduced yield differential between advanced and emerging market economies, in turn dampening investor appetite for emerging market sovereign debt.
The country's so-called economic structural impediments were also highlighted as risks to financial stability. While the energy regulator NERSA has approved a significant number of renewable energy projects, the bank raised the fragility of steady electricity supply as a risk. Not to mention the country's ongoing logistical challenges. Another area of concern was South Africa's need to get off the Financial Action Task Force grey list. The government has set a target date of February 2025. The governor says while there may be factors that result in the country not reaching its target, the National Treasury is going all out to ensure the country meets its target.
And the message from the center of government is that everyone have got to do what they are supposed to do to make sure that they have addressed the shortcomings that are within their areas of responsibility. The National Treasury is doing a very good job coordinating our efforts in addressing these issues, and they actually led the South African delegation that attended the recent FATF plenary.
The financial state of the consumer and businesses was also under focus, given the impact of the high inflation and interest rate environment, with evidence showing that non-performing loans among financial institutions had increased, now adversely impacting banks' profitability. Other risks highlighted included possible climate change impacts on food inflation, as well as cyber threats that could devastate sector systems. The bank gave the financial sector a clean bill of health, but warned market players not to be complacent and to constantly work to mitigate the myriad of risks. Nompumelelo Siziba, SABC News, Johannesburg.